This is the US interest rates. Last week, we had interest rate announcements from the Federal Reserve and the FOMC. It was left unchanged at 5.5%, which was, of course, a hawkish stance by the Federal Reserve and the FOMC because of the inflation rates being higher than anticipated and expected. Right now, the dollar has a bullish sentiment. Starting out the year, we had a divergence between the 5-year bond yield and the 10-year bond yield, and we've had higher prices. This is a sign that we might be turning around very soon. I expect this seasonality to kick in the coming weeks before we come to the close of June. Now, this is where we find ourselves currently. We're bullish from the interest rates. We're bullish because of the bond yield. We're also bullish because of the seasonality of the bond yield. We are bullish on the DXY as well. We have this divergence between the DXY and the euro. A lot of confluence is saying we should be going higher, right? However, after this push, I expect a retracement. We've come right back into that order block for the second time, and then we printed a divergence between the Gbpusd and EURUSD. So we have the trade drive pattern, we tap into another block. We have a divergence with EURUSD and block structure. That is perfect recipe for a very good impulse to the downside. My bias for the pound is bullish until we get into this candle and then look for some bearish signals. My bias for the euro is bullish until this other block, look for some bearish signals, then to go bearish. My bias for the DXY, bearish until we get into this other block and then we look for some signals to go bullish to continue that trend. And I look to see how we turn around and have some exhaustion signals or divergences going into next week on the bond yield. Today, the Monetary Policy Committee announced the official bank rate of the pound. Surprisingly, there was no change. This means that the Bank of England and the MPC are taking a hawkish stance to fight inflation. We still have unemployment claims for the dollar later today, and we have a lot of high impact events, tomorrow being Friday. Starting out this week during our weekly outlook, I expected to see a retracement down into this order block. Now we've had a retracement quite alright, but definitely not up to this order block at this point. Today is Thursday, and we have just today and one more day to close out the week. Now, do I still expect price to come all the way down into this order block? First of all, there was one thing I omitted, one thing I overlooked when I was doing my market outlook, and this is, I'll turn this into a teachable moment. It's something was a mistake on my side. I did not take note of it, but it's very, very important. Now, we've been bullish, like I said, on the DXY since we turned around here, had this divergence and started going up, right? So we've been bullish. I expected a retracement after taking out this high and this high in succession last week. Now, a retracement is expected, but the magnitude of the retracement is determined by the kind of exhaustive price action we have after we take out a certain level. Now, I did not see a significant exhaustion pattern around this high to warrant this much of a retracement, right? Is this still possible? Yes. Do I think it will happen? Probably. Am I going to hold on to these buyers very firmly? No. So that's one thing I want to point out. That's one of the things I omitted in the outlook. You should take note of that. By exhaustive patterns, I mean trade drive or a swing high, or a significant divergence between this pair, being the DXY, and the correlated pair like EURUSD or the GBPUSD. None of that was present before I anticipated this, so I was a bit hasty in my anticipation for this deep retracement. Now, I would like to see the euro fail to take out this low after pound takes out that low and gives us that divergence. Now, this is the pound. This is what I was talking about. The pound has made it to this candle. Seeing as we are right now, taking out this low without the corresponding lower low on the EURUSD would be a significant divergence for me if we follow through with packet structure, breaking structure to the higher side. Now, if we look at the 5-year bond yield, so far we've had a consolidation, which is a good sign that we are exhausting this bearish momentum. We've not had any significant trade drive pattern, none. We've not had any significant swing lows, and no significant high has been broken. No divergence at all. We're still maintaining symmetry. The only divergence that is worth noting, which I want to see how price would respect going into the end of the week, this high, and this high. Now, the crack in correlation comes in the 30-year bond yield. We've had lower prices since then, but do we continue the lower prices towards the end of the week? We'll have to wait and see. This is the divergence I'm talking about. Higher high, higher high, with lower high here. Hello guys, welcome back to my YouTube channel. I hope you had a splendid week. Now let's get right into the recap. No need to waste time. During our market outlook, as you know, I expected the EURUSD to make it all the way back up into this other block before we start any serious continuation of that downtrend as the overall sentiment is. And I expected the GBPUSD to make it into this candle. We made it into this candle quite alright, but not as deep as I would have expected. But during our midweek review, I revisited this and explained what I overlooked that made me misinterpret price action a bit and threw my bias off a little. However, during that midweek review, I looked at that and I corrected my bias and anticipated that EURUSD will fail to take out last week's low, and GBPUSD will take out last week's low, giving us that divergence. And we looked at this divergence here between Monday and Tuesday highs. Between Tuesday and Wednesday highs on EURUSD and GBPUSD as a context for lower prices coming up into this other block. I did not mention this other block in my review, but this is the other block we're reacting off, and this other block here we tapped into last week. So right now we have a divergence between the lows on the EURUSD and the lows on the GBPUSD. We have a lower low on GBPUSD and a higher low
on Euro USD. Now, during our market outlook, we'll look at this and have our bias and anticipation for the kind of price action we should expect going into next week. That being said, let's look at the bond yields. Okay, so we have our 5-year bond yield right here. As we looked at during our market outlook, I expected to see some kind of exhaustive price action going into this week to warrant a change in the trend, because this trend has been a downtrend basically since April all the way to June right now. We did not print any significant exhaustion pattern. So right now, we still don't have any conviction that we have exhausted this bearish momentum, right? Let's quickly look at the other bond yields. Okay, so right here, I pointed out to this divergence during my midweek review. We had a higher high here, a higher high here, but a lower high here. And I was interested in seeing how these diverged highs would hold price to close out the week. We failed to take out these highs regardless of all the high impact events we had on Thursday and especially Friday. So that is something interesting that we would look at during our market outlook. That being said, I'll see you during the market outlook and we'll review exactly what's going on here and the kind of price action we should expect going into next week. Take care, have a lovely weekend, stay safe. If you watched to this point of the video, leave a thumbs up, subscribe if you haven't, because why not? Share this video with anyone who you believe would find value in this video. And until next time, stay safe, trade safe, see you in the next video. Take care.